very different. Hi guys, welcome back to my channel. My name is Rebecca and on this channel I go for all things accounting, finance, Excel and investment related, so if you do like this kind of stuff please do consider subscribing, and otherwise let's get straight into the video. So an individual within the Facebook group posted that they'd like to know a little bit more about the different departments within industry. So if you're an individual who's looking to work in industry, not practice, so not in an accounting firm, then this might be of interest to you. So if we look at a company within industry, what we've got is a sales team, a purchase ledger team, a procurement team, and a finance team. If we're just looking at the finance process, there are others that are involved as well, but I'm going to just focus on those four and the main differences between them. But if after the video I've not answered a question, or you've got further questions about the different departments, then feel free to put that in the comments section and I can take a look. So if you go ahead and work in industry, you'll see that there's lots of different departments. So there's not just a finance department, and finance is a very broad term for what you can do within finance. So you might have individuals who are working purely on the purchase ledger, purely on the sales ledger, or management assistants, management accountants. So roles within industry can vary greatly. Now, if you don't know what the purchase ledger is where we've got a list of all of the transactions with suppliers. So a purchase ledger clerk might be an individual who monitors the supplier transactions that we have as a business. So what they'll be doing on a month-by-month basis is they will be obtaining the supplier statements from the supplier and reconciling that back to what is on the ledger. So if we've noted that we've had an invoice, a purchase invoice from a supplier, then that's going to be shown as a credit balance on the balance sheet at the end of the month. So what they will do is they will be the individuals who would have put that invoice on there in the first place. But when it comes to actually paying that amount, those individuals will be responsible for posting the payment against that individual supplier and that individual invoice. So they'll do a lot of matching in the month to make sure that what the supplier stated as being as outstanding matches what we say is outstanding. So the supplier statement will show a list of transactions that are outstanding, so a list of invoices that we've received as well as purchase credit notes that we've received. And there'll be a balance on it that should match what you have sat on your purchase ledger, but sometimes there's differences between the two because of timing. So purchase ledger clerks put invoices onto the system, they match purchase orders etc. to purchase invoices and delivery notes, that sort of thing. And they also deal with supplier inquiries when they call. But again, that's just a very, very broad summary overview of what they do. It could be involved in a lot of other different things across the business. So on the sales ledger side of things, you might have a sales ledger clerk, and what they do is they put sales invoices onto the ledger against the sales ledger control account, and they monitor customer receipts that have come through the bank. So they will match what customer receipts you've had in against particular invoices that you've raised to that customer. And they'll also be in charge with supplying customer statements at month end so that they can agree the outstanding balance at the month end or year end with those customers. Individuals who work in the sales ledger team are also responsible for chasing customers. So for the likes of any debt that's overdue or is more than say 60 days or whatever credit terms they've got with that customer, they will physically phone that customer or chase them via email or other means, by a letter, that sort of thing, in order to make sure that that debt is collected from that customer. And where there's instances where they've got to increase or decrease the bad debt nominal for any amounts that they think they're going to have to write off as bad debt, then they will also be in charge of increasing or decreasing that. Now, other departments that you might not have heard of is the likes of, say, the procurement team. So a procurement team in a business generally look after purchases, so they procure goods etc. on behalf of the business. So individuals might raise a purchase order that has to go through procurement for their approval, so they can check that it's with a relevant supplier, so an approved supplier for instance, as opposed to just somebody else off the internet that might be doing it cheaper. They might already have an agreement with a supplier that makes it cheaper because they might receive a rebate later on etc. For individuals on site or in the office, but they're also heavily involved with finance because the process within procurement streamlines into the finance department as well. So whilst if you're working in purely finance, so if you're an individual who's doing monthly management accounts, year-end accounts, all of that information from sales, purchase, procurement will be feeding into the information that you've got. So I hope that gives you a little bit of a better understanding of the different departments within a company, specifically to those working in industry. And if you did find it useful, please do give it a thumbs up. Feel free to comment in the comment section below if you've got any other queries, and otherwise consider subscribing and I shall see you on the next video.